everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and there's some interesting news coming out of Japan, and this is a rather short article, but we are going to break this down as much as we humanly can. As this Zero Hedge article says, for the first time ever, Bank of Japan's total assets surpassed Japan's GDP. And as the article goes into, for the first time in history, a central bank has managed to print enough money to buy enough assets to surpass the nation's annual GDP. Under the watchful eye of Kuroda and the overseeing but independent hand of Abe, the Bank of Japan's balance sheet grew to 553.6 trillion yen as of November 10th. That is larger than Japan's annualized nominal seasonally adjusted GDP of 552.8 trillion yen as of the end of June. And as you can see, there's some charts here. As it says, some context for just how crazy this is. Here is the Fed versus US GDP. And then going down, putting it all together, it says, and then what happens next. And yeah, you get the picture. This is crazy. This is absolutely insane. John, can you explain this? What does this all mean?
Well, what it is, Josh, it's Keynesian economics gone wild. Where they actually, this is the kind of the death row of Keynesian economics. They've really gone and doubled down on everything that they've done, Josh, and this is what the outcome is just a mass amount of printing of currency, Josh. And I actually wrote down a ton of different information that I pulled from data online, and I'll give you a little bit of more insight here onto the story so we get kind of an understanding of how crazy it is in Japan. So for example, as you said, if you take it in US dollars, for example, the GDP versus the actual balance sheet of the Bank of Japan, you're looking at 4.904 trillion US dollars in the balance sheet of Bank of Japan, and then you're at 4.872 trillion. That is the GDP. So that is insane. And then of course you have the government debt to GDP, which is 253%, Josh. 253%. So that is 1.2 quadrillion yen. And then that amounts to 9.63 trillion yen, trillion dollars. And the balance sheet of the Bank of Japan holds 4.15 of that. So it holds almost half of all the debt that exists in Japan's government. They've been held, by the Bank of Japan. I'm gonna go a little bit further here before I let the word over to you again, Josh. If you look at the total ETF market cap, for example, it's 275.8 billion US dollars, and then the Bank of Japan actually holds 198.69 billion of that, and that equates to 86.11% of all the exchange traded funds are owned by the Bank of Japan, Josh. It's utterly insane. This is a policy by buying assets that I think we're going to see coming to the Fed, coming to the ECB. The ECB, of course, is buying corporate bonds. They're buying corporate debt to prop up the corporations in Europe and the banks. But here you're seeing, they've been propping up, they've been buying stocks, they've been buying real estate, they've been buying, of course, the ETFs, which is a derivative of bonds, of real estate, of stocks. Again, it's a derivative of a derivative. So it's very interesting to see how they are trying to desperately prop up a market that is really struggling. But what's really interesting about this, Josh, is if you look at their total debt to GDP over history. So if you look back at the early 90s, they are actually better off right now, debt to GDP wise, of what they were, because they had their massive demographic cliff in the 80s when the whole system crumbled. One great documentary to watch is The Princess of the Yen. which I highly suggest you guys can look at, because you'll get an understanding of what happened in Japan and the mass amounts of printing that came to the bubble, to the precipice in the 80s, when the Nikkei collapsed completely and all the assets collapsed, because there was nobody, like that's when you had the peak demographic bubble, when most people were at the age and then they started to retire, and now you're seeing a mass plummet in like the Nikkei is not even past the old top back in the 80s. That should tell you something, and that's what I think we might be seeing in coming to the United States, coming to Germany, coming to other countries that have this demographic cliff, on the verge of it, Josh. I think we're going to see a lot more of it. And then, of course, all this debt on top of that, the Japan has a A+ rating with S&P, for example. The problem with that, though, it's quite easily that it could be pushed down to a triple B, for example. And if that happens, Josh, they're going to be in some substantial trouble, because that's when the cost of all this debt that they accumulated, because in Japan, we got to remember the negative interest rates. The Bank of Japan interest rate is at 0.1 negative right now, and it's insane. If you look at the chart, Josh, of the actual interest, it looks very similar to the United States, but of course, Japan hasn't increased their interest rates at all lately. So it's very different. And then I have one last point, Josh, before I let the word over to you. I got some interesting, I've been working on what I call the World Wide Web of Debt, and I used the Bank of International Settlements debt numbers. And I've been creating some really fancy infographics for people to be able to watch and be interactive with. Check out what's the debt levels in the world. And I took the Japan debt, which is all the debts that have been borrowed to Japan from other banks, including their local debt, and it's about 20 trillion US dollars, Josh, that you're looking at. And then, of course, the Japanese banks, they have borrowed about $1.42 trillion to United States banks. Then it's something very interesting. So their second creditor, their second, not creditor, their second counterparty that they borrowed to, that is number 2, is $708 billion, which is the Cayman Islands. So these banks are doing a lot of offshore activity as well, hiding a lot of their gains and money, probably, Josh. So it's just a massive bubble happening here in Japan, and it's not very good. It's
we see two evils there. We see two evils there, John. We have the banking system, and then we have the government, and it's like, should one evil hide their money from via keeping themselves away from extortion by the other organized crime racket? I don't know. This is what Robert Kiyosaki talks about. It's the fake money, fake news, fake markets, fake everything. And of course, as we always go into, all fiat currencies eventually revert to their true value of zero. They always have, they always will, going back to 1024 AD in China. And we're seeing this push for zero reserve policies at banks throughout the world. Just this vast, unaccounted for printing of currency, the devaluing of its purchasing power, just complete insanity. John, how long do you think that Japan can sustain themselves with such a massive, this is a crazy, when you compare it to their GDP, I just don't even know what to say. It's just so insane. How long can they sustain themselves like this?
It's unknown as we are right now, because this is a massive experiment that they never done before in history. It just takes a little bit of, let's look at history and what have happened throughout history, though, is when you print this amount of money, it is not very good for your economy. It'll hurt your economy over time. And of course, how are you going to pay back all that debt? And what if the interest rates just raised 0.5% when they're at 0.4% instead of negative 0.1%? You're looking at such an unsustainable bubble that they've blown in Japan. And when the central bank is starting to own most of the assets in the country, I was talking about the ETFs, but they also hold stocks and real estate as well. you are looking at a totally unsustainable system. It just shows you how it's become extremely unsustainable, Josh, by the Bank of Japan actually having to go in and buy all these assets. As I said, it owns. What was it, Josh? It owns 86.11% of all the exchange traded funds that exists in Japan, and that is baffling. But it's not really baffling, because I have been written about this before. There's actually a Steemit article out there. I said the Fed will own everything, then nothing, and that's what this is coming onto us here, is that the Bank of Japan is doing exactly what I predicted that the Fed is coming will do down the line, when at that point when their market is completely broken. They're on a demographic cliff, as I said, in the United States, in Canada, in Germany. People are aging. A lot more people are retiring. They got to exit out of their funds that they hold. And who's going to buy all those funds? Well, you're going to end up with nobody really wanting that, because the millennials feel that they don't trust stocks because of 2008 and 2001. And you're looking at a distrust in the whole banking system. And so you're looking at them having to probably buy all these assets, like that's going to come here to Canada, to any country that has a demographic cliff, and that's most Western countries, because we had that massive baby boom since the 40s, where you had a huge boom in the births and the population, and now that's my parents, your parents, Josh. They're the baby boomers that are now retiring, and they are trying to sell their assets, sell their houses, but they've been propping this up, the central banks, by having low interest rates and letting money be so cheap that they use share buybacks into the economy. The Bank of Japan is doing that the corporations within Japan is doing that as well, buying back their own stocks, and it creates a fake valuation. I actually was listening to Max Kaiser. When you do these share buybacks, you're actually taking away shares out of the existence, but you have a lot more debt. But now, since you have less stocks, the price to earnings ratio looks a lot better than it would have if you actually had those stocks still available. So they're kind of manipulating and trying to hold investors in the blinds of understanding how bad the economy really is, and how unsustainable this is. This is not, this policy, Josh, is so out of whack that it's created all these bubbles around the world, and it's, as Mike Maloney said, it's everything bubble. Everything from bonds to real estate to debt to stocks.
Of course.
Everything is in a huge bubble, and it's been propped and pushed forward by the desperate central bankers. They're trying to centrally plan the economy, and they're not willing to have a crash in the economy and actually feel the pain of their idiotic policies throughout the last 100 years.
The longer they push it off, the worse it's going to be. The more you prop up that system, the worse it's going to come down on everyone. Everything's manipulated. Everything's centralized. And by the way, I heard some barking behind you. I think Paul Krugman is barking at you in protest of what you're saying in his Antifa outfit.
Hey,
maybe breaking
Josh!
some windows to stimulate the economy or something. He's probably getting the word out to all his protester friends via the fax machine. I don't know.
Hey, Josh, he got to deal with Masterclass. I don't know. I feel like Masterclass, that's like a low. Come on, they had so many good people there. I was looking at all their experts, but then they brought in freaking Krugman. Come on.
You know what I find funny though is that
a freaking tool. He said in 2008.
The backlash is hilarious.
Yeah, they said in 2008 they learned a lot. It's like, what the heck did you learn? You printed a whole bunch of money. You bought up a whole bunch of assets. What did you learn from that? That you can just buy up the whole economy and then keep it going for a little bit longer. I don't understand what he's saying about what they learned. They haven't learned nothing.
The good sign is that when you see the Facebook post for Paul Krugman's masterclass, like every single comment is negative on him.
Yeah,
everyone is just laugh reacting.
Get rid of him.
It's so ridiculous. No one believes in Paul Krugman.
But anyway, he won a Nobel Peace Prize. No, not a Peace Prize. A Nobel Prize in economics. He's the most smartest guy in the world, Josh.
Yeah, they just hand those out these days. But I mean, anyway, breaking from that, let's talk about something else like the internet that Paul Krugman said was just a trend. He also said Bitcoin was just a trend, by the way. Let's talk about some solutions. Whatever Paul Krugman does, do the opposite. Well, no, there's more to it than that. So when it comes to a highly centralized, highly manipulated economy and markets, we have to break free from those centralized cartels, the government, the banking system, central banks, etc. So what do you look to? And we've gone into this a million times before. I still hear Paul Krugman barking behind you. When I'm focusing on solutions, I look at humanity has survived for thousands of years based on self-sustainability. Freedom, responsibility, and freedom go hand in hand. Independence, being able to look to do your own work like food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block, actually being able to sustain yourself without being dependent on the people who are dependent on your dependence. The central banking system, the government, the banks. Now, of course, there's gold. There's silver, wealth insurance. That isn't an investment, and this isn't investment advice. It's just, well, it's our opinion, but I mean, look at history. Gold and silver are incredible preservation of wealth, purchasing power. And then there's things like cryptocurrencies. Again, like I said, Paul Krugman says that they're just a trend. Again, do the opposite of whatever he says. Because he said in, 1997, the internet's just a trend. And he also said that the economy was going great at, 2007? Anyway, the point is, we need to look towards these decentralized methods to break free from the central banking system. Now, that doesn't mean any cryptocurrency goes, because most of them are terrible. But there are so many amazing cryptocurrencies at the same time that are truly decentralized, have fundamental value, follow that subjective value of scarcity, application use, demand. Very important, very prosperous, infant market. Everyone's freaking out about the bear market right now. Be patient. Amazon took 10 years to recover after the dot-com bubble after all. Well, I mean, close to 10 years. It was a hard time for them for some time. And people didn't see what the big deal was. Well, why would I want to go online to get books? Well, they didn't realize that marketplace could grow at such a great scale, and there's so much fundamental there. I'm not sure about these days, they're a little bubbled, but all the same, you got cryptocurrencies that are allowing you to send $10,000 for an 80-cent fee, or go to different countries around the world and be able to pay for things regardless of what your bank says, or regardless of the fees your bank puts in place, regardless of the restrictions, regardless of the fact that if your money's in the bank, it's not yours, it's the banks. It's always the banks. Guys, you are giving your money to the banks, and they only are, by law, quote unquote, supposed to give you back a certain amount if they lose it all. I know in some places it's lower than 1%. Some places it's up around 3.5%. The depositor insurance, it's not safe. Your money is not safe in the bank. That just goes without saying. At this point, they're all bankrupt. You look at the banks around the world, and as John has gone into, the cash to deposit ratio is absolutely insane. I mean, the amount of depositors, the deposits covered with cash, in many cases is below 1%, in many cases below 0.05%. I mean, just absolutely horrible. So John, as we finish this off, Japan's insane. All the countries of the world are insane because we got organized crime rackets hand in hand with these quote-unquote independent central bank entities forced on people under legal tender laws, forced usury, fractional reserve, zero reserve, quantitative easing, all that madness. They are all doing the same thing in every country in the world. What is your bottom line as we close this off?
It's time to short Krugman, Josh. That's what
he's already short.
Yeah, it's just we got to get away from the belief that these central entities have the solutions for us. They clearly aren't having any solutions. They're just pushing off their inevitable, faith, which is the failure of these institutions. I just recently created a huge expose of all the bank debt in the world that have been issued, and it's interesting. I've been slowly putting out more and more content. I have a series now called The World Wide Web of Debt, and I'm putting it out on something called Infogram, which is a fantastic infographic system where you can actually interact, look at different charts, and get all the data that I've been collecting over the last month or so. And you'll see how insane it is. Also, I have a special report that I did just recently on the Australian economy. I went into great detail about everything from their exports, imports, older commodities in different sectors. I looked at their businesses. I looked at their banks. I looked at their government, and I did a whole bunch of analysis on it, my personal perspectives on it, and I have it available. If you want to approach me, you can send it to John at. You could send me $10 to john@theeconomictruth.org, and you'll get this Australian report. It's if you are in Australia, or if you are in surrounding areas and you're looking at investing in Australia, I highly regard that you take a look at this report. It's, of course, my opinion. It's not financial advice, but I highly suggest, because I used a lot of time on this and I found a lot of very dangerous issues there, and you spoke about a couple of them just in short there, about deposit insurance and the banks, the cash to deposit ratio. It's just insane how this economy has been so distorted, Josh, and it will fail. It's no doubt about it. It's just like, how long can it keep on prolonging? I'm actually pretty happy that it's not gone down yet, because I continue to be able to put protection money aside in order to be at a better position when it happens. So I'm still happy that it actually takes a little bit longer than I was hoping for.
Yeah, by all fundamentals, it should have happened a long time ago, and it's better to be over-prepared than under-prepared, folks. If they've shoved you down that bottomless pit of debt, you're forced to ask for a ladder up from the government and the banking system, pushing you into perfect servitude, like I always say, right where they want you. You have to break free. There are so many ways. Check out John's reports there. Of course, you got a whole bunch of books as well. We could talk about this stuff all day. We got so much. We've got so many videos up over the years, John. That
it's pretty crazy when you look at it. We're almost at 1,000 videos now. It's just incredible how within 3 years how fast this has gone, Josh. It's pretty cool though. It's been very blessing for us to be able to put out all this great content in order to help change hopefully the future of what we're looking at, to awaken people and make them aware of all these problems, so they can position themselves so they don't have to be on the wrong side when everything comes apart.
Exactly. It's up to you as individuals. Do your own due diligence. It's aging me fast, all of this craziness happening around the world. As you could tell, I'm pretty tired, because it's just one thing after the other. It's just a never-ending news cycle of insanity, debt, destruction, centralization, manipulation, all that crazy fraud. But it's important that we understand it. We get the solutions, and we solve those problems independently, not looking towards massive entities to be dependent on, because that's exactly where they want you to be, folks. Culture of dependence. It's horrible. Don't allow it to happen. Be independent and free. Decentralize everything. Rule yourself. Thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below, as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter. As we are getting demonetized and censored and all that, we don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line YES, YES, and we will include you in the newsletter, where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.